Welcome back to Investing Talk podcast. Today, we're taking a close look at INDI Semiconductor. You might be hearing their name pop up more, especially if you're tracking, the future of cars and tech.
That's right. They're an interesting one.
You shared some good material on them, and our aim today is really just to cut through the noise, understand what makes them tick.
Sounds good.
We'll dig into what they do, how they're performing, what analysts are thinking. Basically, give you a clear picture.
Comprehensive overview.
Think of it as your personal rundown on INDI Semiconductor. We'll break down the business, the stock trends, financial health, and maybe what's on the horizon.
Okay. Well, they operate in a pretty specific niche, the automotive semiconductor industry. Their real focus is on analog and mixed signal integrated circuits. These are really crucial for things like advanced driver assistance systems, ADAS, and the whole shift towards automotive electrification.
Right, the brains behind the new features.
Pretty much. Their main product areas really highlight this: ADAS, sensor interfaces, connectivity, power management. Then there's automotive connectivity itself, so ultrasonic, radar, LiDAR sensors, and also silicon photonics and sensor systems, which is all geared towards improving power efficiency and lowering costs.
And it's not just passenger cars, is it? I saw they're also looking at industrial mobility applications.
Correct. It broadens their potential market a bit.
What really stood out to me, though, were those partnerships. Volkswagen, BMW, those are big names to have on board already.
Oh, absolutely. Landing those kinds of partners early on, well, it suggests their technology has some real pull with the major automotive players. It's a strong validation.
Okay, so they've got the tech focus, the big partnerships.
Yep.
How's that translating to, the stock market lately? You mentioned it's been a bit wild.
Volatile is probably the right word.
Yeah, over the past month, it dipped down to around, $2.08? And looking back further, say 6 months, it's been mostly downhill. Past year has seen significant pressure. The 52-week range is pretty wide, $1.54 to $7.82.
A real roller coaster for investors.
But then there was that interesting little spike. On April 11th, 2025, it actually gained 9.47%, back up to $2.08 again.
That specific jump is worth noting, but here's a point of caution. The trading volume actually decreased on that day.
Ah, okay. So the price went up, but fewer shares changed hands. What does that usually signal?
Well, sometimes lower volume on a price rise can suggest maybe the conviction behind the move isn't super strong across the market. It could hint at potential instability, maybe a reversal later on. Something to watch.
Gotcha. And that kind of ties into the underlying financials, doesn't it? Because, like we noted, revenue's been growing, but they're still reporting bigger operating losses.
That's the core tension right now.
In Q4 2024, revenue hit $58 million. That's up 7.5% from the previous quarter, which sounds good.
It is positive top-line movement.
But the GAAP net loss for that same quarter was $35.3 million. That's an $8.18 loss per share on a GAAP basis.
And that Q4 report really crystallizes the situation. Revenue up, yes, but profitability is still elusive. The non-GAAP loss per share was better, $0.11, but still a loss.
So looking at the broader financial health, what's the bigger picture?
For the full year 2024, total revenue came in at $216.68 million.
Which was actually slightly down from 2023, wasn't it?
It was, slightly down from $223.17 million in 2023. However, if you zoom out further, the longer-term trend is quite impressive. They grew from just $22.6 million back in 2020 to that 2024 figure. That's significant expansion.
That context is important, shows the growth trajectory they've been on. And analysts seem to expect that to continue, right? I saw projections for pretty high annual revenue growth.
Yeah, that's true. Projections are quite optimistic, around 40% annual revenue growth over the next 3 years, which is considerably higher than the industry average.
So the market sees potential for future growth, clearly.
It seems so. But the bottom line, literally, is that they consistently report negative earnings per share. They aren't profitable yet.
Which means no PE ratio to look at?
Correct. We can look at the price-to-sales ratio, though. It's around 2.6x.
How does that compare?
It's actually lower than some of their bigger, more established competitors. Might suggest the market is valuing their sales dollars a bit less, perhaps because of the lack of profitability currently.
Okay, so let's sort of crystallize the main points. Key concerns or red flags would be those ongoing losses, despite the revenue growth and obviously the stock price volatility we discussed.
Those are definitely the main things to keep an eye on from a risk perspective. It shows they're still heavily investing and haven't quite reached that profitability inflection point.
But on the flip side, the strengths are pretty clear too. Their innovation in these really advanced, crucial automotive technologies.
Absolutely.
Mm.
ADS, electrification, sensors, these are central to where the auto industry is headed.
And having that established customer base, those big names like Volkswagen and BMW, that's a major plus. It validates their tech.
It gives them credibility and presumably a strong pipeline if those programs ramp up.
Okay. What about market sentiment? What are the analysts generally saying? It sounds like there isn't really a strong consensus.
That's a fair assessment. The ratings are quite spread out. You'll see analysts recommending strong buy, but others are at hold, and some even have strong sell ratings.
So, a lot of disagreement.
A fair bit, yes. It reflects the uncertainty. Recent news flow and online chatter seem generally cautious, largely driven by those financial results and maybe wider market conditions.
But you mentioned the consensus leans towards buy,
That-
even with the caution.
Interestingly, yes, the average rating tends to lean towards buy or strong buy, but the price targets themselves have a huge range, anywhere from, say, $4.50 up to $10.
Wow, that's a wide target range. Shows the differing views on potential upside.
It really does. Some see significant recovery potential, while others are clearly more skeptical given the current hurdles.
And speaking of hurdles, how do they stack up against the competition? It's a tough field. NXP, STMicro, Infineon, these are giants.
They are indeed the established leaders. INDI is much smaller in terms of market share compared to those players.
So how do they compete?
It seems their strategy is focused on differentiation through technology leadership in specific high-growth areas. ADEs and electrification are prime examples. They're likely not trying to match the giants product for product across the board, but rather carve out a niche with cutting-edge solutions.
Banking on innovation to win. Makes sense. So looking ahead, what should we be watching for? What are the potential catalysts and the risks?
Well, catalysts are definitely tied to execution. Launching these new ADIs and radar programs successfully could be a big driver. And of course, upcoming earnings reports will be critical. Everyone will be watching for signs of improving profitability or at least progress towards it.
Makes sense. And the risks? Still macro concerns.
There are several risks. Slower production ramps in the auto industry due to economic conditions, that's one. Regulatory changes around auto safety could impact demand for ADAS, though that could also be a positive catalyst depending on the changes.
Right.
Then you have the usual suspects. Geopolitical tensions, ongoing semiconductor supply chain vulnerabilities. Those affect everyone in the space.
And internal challenges, too.
Oh, certainly. Managing their operating expenses effectively while funding these new, complex product launches is a major balancing act. Execution risk is always present.
Has management commented on this? What's the view from the top?
The CEO, Donald McClymont, generally expresses quite a bit of optimism. He often highlights their unique product portfolio and those strong customer relationships we talked about.
Standard CEO messaging, perhaps, but important context.
It is. You always weigh that against the actual numbers, but it shows their strategic direction and confidence level, at least publicly.
Okay, so let's try to wrap this up for everyone listening. INDI Semiconductor. Clearly a company with a strong tech focus in a really important growing sector, advanced automotive systems.
Correct. Innovating in key spots like ADS, electrification, and they've snagged those major automaker partnerships, which is a definite positive.
But, and it's a significant but, the financials show they're still losing money and the stock's been, well, choppy, reflecting market uncertainty.
That sums up the core dynamic. There's analyst disagreement, optimism about growth potential, but also very real risks related to the market and their path to profitability.
So this look into INDI Semiconductor gives you hopefully a clearer snapshot. It's this interesting mix of potentially groundbreaking innovation and current financial challenges, a situation worth following for sure.
It definitely presents a complex picture for potential investors. Lots to consider.
What stands out most to you from all this? Or maybe what further questions does this bring up about their tech or their place in the market? We'd love to hear your thoughts. And if you found this discussion insightful, please do subscribe, give us a like, and drop a comment. We always want to explore the topics that you find most interesting.